What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on Tesla, Nio, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. All right, so regular viewers of the channel will know that I'm not just big on those four that I've listed off, but also big on crypto. And this week can only be described as a giant party for the crypto world. And why would that be? Well, it's because the much anticipated listing of Coinbase went live on Wednesday with a record open. But it wasn't just the record open of Coinbase that, sent everything into a frenzy. It was also the fact that Bitcoin, Ethereum, Litecoin hit all new all-time highs. But not only that, Dogecoin, the meme lord crypto itself, returned a staggering 565% this week alone, eclipsing everybody else in its wake. Just mind-blowing. If you're a Dogecoin holder, you know exactly what I'm talking about, but more on that later. So for those of you who may be wondering what Coinbase is, think of it at the most basic level as the New York Stock Exchange, but instead of trading stocks on the platform, you're trading cryptocurrencies. And so the focus of today's video will be on why the listing of Coinbase is so significant to the crypto world, and we'll also hear from analyst Matt Palmer and why he assigned a $500 price target right off the bat. We'll then get into some noteworthy news for Nio and Tesla, and we'll wrap things up with the weekly performance review expressing percentage gain or loss for the portfolio. So a decent amount to cover, and today's random clip is something that I made myself and I'm pretty proud of, so stick around till the end if you want to see that. And remember to like and share so that the YouTube algorithm pushes out the content to more people that may benefit from it. For any of my newcomers, consider hitting the subscribe button so that if you do like today's content, you won't miss out on the next videos that I post. All right, so let's jump right into why this public listing is such a big deal. Currently, as a retail investor or a large institution, if you wanted to get exposure to cryptocurrency as a whole, your options are pretty limited. Your options are essentially either buying directly into whichever cryptocurrency of your choice. So you would sign up through, call it Coinbase or Robinhood or Binance, and then go and individually pick the cryptos that you want. Option number two would be to buy into a company that holds Bitcoin onto their balance sheet. So think of Square, Tesla, MicroStrategy, or PayPal. Option number three would be to go with a company that mines your cryptocurrency of choice. So think of Mara and Riot for Bitcoin or Hive Blockchain for Ethereum. Now, the problem with that is there's well over 100 cryptocurrencies out there right now and more being created every day. So it's pretty challenging to figure out which ones are going to survive over the long term. So typically what one would do in situations like these is go with an ETF, which basically gives you wide exposure to every player in that sector. But the problem is right now there's no approved ETF in the US. Now, there are large financial institutions that have filed. There's about 10 of them right now that have filed for a formal ETF, but at the time of the recording of this video, none have been approved. So really the hype around Coinbase is twofold. First and foremost, this is going to be the most pure play for anyone wanting to get exposure to the crypto world. And so you can really think of it as an ETF. You get to buy one stock and you get exposure to most of them. And it really doesn't matter who is winning in the long term, because as long as people are transacting on the Coinbase platform, Coinbase gets to collect transaction fees for every transaction performed. So ultimately, no matter who comes out on top, Coinbase is still winning. And secondly, this further legitimizes the crypto space as an asset class, and it might just be the final push that the SEC needs to approve all those other ETFs. And you might be asking yourself, well, when that happens, doesn't that pose a threat to Coinbase? The answer is no, because it still remains the most pure play access to the crypto world, right? So when those ETF get approved, they're going to be adding the Coinbase stock to their overall portfolio, which gives it more exposure and bodes well for the stock price overall. In the upcoming clip here, we'll hear from five-star analyst Mark Palmer on why he assigned a $500 price target for the stock. And you can see that he is ranked 147th out of 7,455 analysts and has a pretty strong track record of success.
So you think this should be a $130 billion company? Why? What are you comparing the valuation to?
That's right. In our view, Coinbase falls in the same category as other companies companies that are on the front end of an enormous open-ended growth opportunity that has arisen due to the adoption of a new technology. What kind of names are we talking about? Tesla, Zoom, Snowflake, and the like, that command premium multiples because their growth is enormous. Their positioning within their industry is unique, and they're going to be able to take advantage of that. Coinbase is particularly well positioned, just given the fact that it is the easiest on-ramp for both retail and institutional investors to the world of cryptocurrency. It is also a safe and comfortable means of transacting, given the fact that the company, since its founding in 2012, has adhered to regulations in a very strict manner, and at the same time has never been hacked. Clearly, Coinbase, it fits into a category where if you're an institutional investor, you're not going to be taking career risk by choosing to work with Coinbase.
Now, interestingly enough, one of those institutions that has decided to trust Coinbase was Tesla earlier this year with their $1.5 billion worth of Bitcoin purchase. And we all know how that one turned out. As more institutional interest came into the space, the value of that purchase has pretty much doubled. Now, it is important to note also that with any new public listing, there's going to be a lot of volatility around the stock. So if you're interested in buying, so that's something to consider. I personally went and took a small position into the stock. Again, this is not meant to be financial advice. I view this as a long-term play, and therefore I want it to be in right from the ground floor. And so as you know, the stock moves up and down over time, I will likely add on dips and average down as needed.
Like Mark, isn't it just correlated though with the price of Bitcoin? If Bitcoin slides, and we've seen some huge moves, and doesn't Coinbase just do whatever Bitcoin's doing?
Well, there's definitely a correlation between the price of Bitcoin and Coinbase's stock. I mean, what we particularly see is a correlation between the price of Bitcoin and what are known as monthly transacting users, which is one of the most important metrics in the Coinbase story. If you look at the first quarter, we calculated that there's about a 96% correlation between the two. You cannot get around the fact that Coinbase is very much a play on the adoption of Bitcoin and digital assets writ large. That's just what it is. We happen to believe that Bitcoin is a fantastic store of value, and that given the inflationary pressures that we have seen at a macroeconomic level, it will continue to see upward pressure over time. Coinbase is in a position to be able to take advantage of that, not only on the retail side, but very importantly on the institutional side. The idea here is to put together custody, over-the-counter trading, lending, staking, put it all into a package so that institutional investors are able to get that on-ramp into crypto, be able to keep their assets safe, and be able to earn on them. Now, one of the things that is fantastic about the prime brokerage business as it pertains to equities is securities lending. It's a huge business. It's a highly profitable business. We believe that Coinbase is particularly well positioned to be a lender of crypto in that same way to institutions and to grow accordingly.
Obviously, Mark has endorsed the stock, but he isn't the only one who feels this way. There's 3 other analysts who have issued coverage of the stock with a buy rating, and the consensus average price target across all 4 of them is $536 in a year time frame. Now, make no mistake here, the interest in crypto and blockchain technology by the traditional financial system is only growing, gaining momentum. Case in point, earlier this week, there was another announcement that JP Morgan Chase, MasterCard, and UBS all invested a total of $65 million into the Ethereum infrastructure. And why would that be? Well, the goal is, and I quote, to further converge the centralized and decentralized financial domain at this particular exciting time of growth for the entire industry. So we can't close out of the Coinbase discussion without talking about the biggest beneficiary this week, and that would be Dogecoin, literally pulling one of these. It's no secret that I'm a big fan of the meme crypto, but I think after this week and how much it moved, there's a lot more believers now in its potential, right? And also, I'm interested to know in the comments below if you have been converted and you believe that it is now going to $1, or if you're still on the fence and not sure that you want to put any money into it. I've said it before, again, not financial advice, but I would highly recommend that people consider putting some money towards Dogecoin, right? Not saying put your whole life savings in it, but think about the potential that lies in if it does make it to $1 from the current levels around 25 cents. That's 4 times whatever you put in. Now, again, it could crash and burn and you might lose that money. So weigh all the pros and cons, and it's really on you guys to make the decision on whether or not you're going to invest. As for myself, well, you already know, I hold it and I'm going to hold on to it. We're going to the moon. All right, so let's talk about the 3 main reasons why I believe it shot up the way it did. Well, reason number 1, we've already covered. That's Coinbase going public and basically lifting the entire sector. Reason number 2 is because the CEO of Slim Jim actually gave a shout out to Dogecoin during their earnings call earlier in the week. And his exact words were that Slim Jim built its online community on memes, and that makes Doge and Dogecoin a natural fit for the brand. It's been a very successful marketing campaign for Slim Jim, and obviously that's why they gave it a shout out during their earnings call. And the last thing really is this brewery announcing that they're now going to be accepting Dogecoin as a form of payment within their stores. So you can now officially buy beer with Dogecoin. Let's get into part 2 of the video and talk about my 2 favorite EV companies, starting with Tesla. A lot of the inflation fear discussions have pretty much been put to rest at this point. Well, at least for now, as the 10-year bond yield rates have retreated to their lowest level in quite some time. This has been beneficial to the stock, seeing an overall gain for the week of just shy of 8%. And there's been a lot of good news posted throughout the week, starting with the Model 3 taking the #1 bestseller in the Netherlands. And this really hasn't happened since September of 2020. The next bit of good news was more testing of the Tesla Semi along the Model S Plaid. We also formally heard from Elon announcing that FSD subscription will start in May of 2021, so next month. And that should open up the software to a much broader audience and generate a lot more software revenue for Tesla, which in the long term is a good thing. Goldman Sachs also issued a letter to its investors, basically recommending that they do buy Tesla as they see the age of fossil fuel coming to a close. Last but not least, Elon took the Cybertruck to Giga Texas for a little joyride and also spent a little bit of time discussing what he foresaw as the year went on, and basically announced that the Model Y was actually going to be the first model produced out of Giga Texas. And if they were lucky, some Cybertrucks would be delivered by the end of the year. Truth be told, I don't necessarily expect volume production for either one of those models before the year is over. It's probably going to be in 2022 anyways. And really what I'm looking for here is just confirmation that Giga Texas will be operational this year. And it sounds like it's well on track to be the case. And really all this is helping build momentum as we head towards the Q1 2021 earnings call set to be held on Monday, April 26, 2021. Now over to Nio. The stock remains under pressure for the week with a loss of 4.90%, but that's not to say that the company hasn't been making all the right moves. Some of the highlights from this week alone include the launch of their 2nd generation battery swapping stations. Some of the main benefits over Gen 1 include increased capacity with now up to 13 batteries. In some instances, for some of the models, there is no longer a need to lift the car to complete the battery swapping process, which reduces the overall swapping time. And also, if you recall, Nio has a goal to complete the installation of 500 battery swapping stations by the end of the year, and this now makes 201. Second major news for Nio this week was the signage of the partnership between Nio and the Sinopec Group. Sinopec is an oil giant, and to put things into perspective, they are the 2nd largest corporation in the world. So when you think about Nio's plan to expand globally as the years go on, they're going to have access to all of the gas stations that Sinopec has all over the world. As a result of this partnership, Nio is looking to grow their total number of battery swap stations from 500 in 2021 to 5,000 in 2025. And that alone gives you a scale of the tremendous amount of growth that they expect over the next 4 years. But if that wasn't enough, Nio has also announced that on May 6th and May 7th, they would discuss their expansion plan into Europe in great details. Now, we already know that they've set up a showroom in Norway, but this should now provide us with more details around what comes after that. Now, as the week gets underway, things to look out for coming from Nio are the grand reveal of the interior of the ET7 set to take place at the Beijing Auto Salon, and that's again starting next week. But beyond that, we have now a formal date for the Q1 2021 earning call set for Thursday, April 29th. So at that point, we'll find out how Nio did for the entire quarter and whether or not they're a step closer to achieving profitability. It's hard to say whether or not the stock will remain under pressure between now and the earning call and beyond. But the way I look at this is if you haven't reached your desired number of share count, this is the perfect time to add because it's consolidating right now and there really hasn't been any revision to any of the price targets, right? At the highest point, we're still looking at potentially $100 by the end of the year. And at the lowest point, the lowest price target right now for Nio is 60 some dollars. So still a lot of upside from here. Let's get into the weekly performance review for the portfolio expressed in percentage gain or loss for the week. And so I'll bring it up on the screen here. And you can actually see that we came into the week in the green at 1.19% before dropping to the lowest point at 2.55%. And from there, I mean, you can see on the graph that it's pretty much a roller coaster. It shot right up going into Tuesday, leading into Wednesday when Coinbase went live. And at the top on Wednesday, we were up 16.40% before losing some momentum and dropping back down to the lowest point or another low point at 0.94%. And from there, again, we regained some momentum, pushed all the way up to the highest point in the week at 19.84%. And then we lost a little bit of that momentum going into the weekend. And we're now sitting at a gain for the week of 8.45%. Nothing to sneeze at if you consider that for the most part, the equity side of my portfolio wasn't doing too hot. And all of this green is due to, frankly, Dogecoin. So that's a good segue into mentioning again that the outro to this video will be the random clip of the week that I made in celebration of Dogecoin hitting 40 cents for the first time ever. So if you enjoyed today's content and found it insightful, please drop the video a like and share with your friends. And for any of my newcomers, remember to hit the subscribe button and ring that notification bell so that you don't miss any future content. With that said, thank you for watching, stay humble, hustle hard, and I'll see you in the next one.
Everybody